So guys, in today's video, I'm going to be talking through the steps that I've taken to start investing in the stock market as a total beginner. Now, I know when you're new to investing, it can seem really scary at times because you see all these people talking about all these different terms and you have no idea what they're talking about. And sometimes it just feels like it's a totally new language. So I'm going to be doing my best to just walk through the core basics. And then I'm going to be walking through the exact steps that I took to really get started. So hopefully that can help you in some way. But do remember, I am not a financial advisor, so do make sure you are doing your own research. And remember, investing does have risks, so you aren't always guaranteed to make money. Hello, welcome back to my channel. My name is Veronia, and on this channel I talk about all things to do with money, your career, and having a positive mindset for success. So if that does sound great to you, then be sure to subscribe to my channel and hit the bell notification below so you don't miss out on any new videos. Okay, Veronia, can we just start from the beginning? What do people actually do when they invest in the stock market? So basically, in simple terms, if you do decide to start investing in the stock market, you will have the opportunity to start buying and selling shares. So what that usually means is that you will actually become an owner and have a small slice of ownership in the company that you've chosen to invest in, and that company will actually be listed on an exchange. So for example, the London Stock Exchange. Now, before I go into a bit more detail, I do want to talk about the terms stocks and shares because you will hear them interchangeably. So usually when you hear about stocks, that's more of a generic term. So you would use it to basically describe a part or a slice of one or more companies. But then when you hear shares, that's slightly more specific. So usually that will refer to the ownership of a particular company. But to be honest, in simple terms, they essentially refer to the same thing. You're basically just investing in shares of a company's stock. So for example, you might earn 10 shares in McDonald's stock. Now you could choose to invest in individual stocks, so those will be individual companies listed on the exchange, or you could actually choose to invest in funds. So what I mean by funds is, put simply, rather than investing in just one company, if you invest in the fund, you would actually be pooling your money with other people, and that would essentially make a collective investment. So rather than having one company, you will actually have a range of companies within that fund. So essentially, you'll be holding a small piece of every company within that fund. So how I understand it is, rather than putting your eggs in one basket, so in one company, you would essentially be putting your eggs in a whole load of different baskets, and that will be with other people as well, and that will be the fund. Now there are different types of investment funds as well. So you could either have an active fund or a passive fund. So when people refer to active funds, it's kind of in the name, it's basically actively managed. So this is where you'll usually have a portfolio manager who will actually pick the stocks on your behalf to go in that fund. So effectively, it's more of a hands-on approach because you've actually got someone picking those stocks for you to go into that fund. So whenever you hear of mutual funds, that's essentially what it is. So your fund is managed by a professional. So then in contrast with passive funds, that would be a fund that isn't actively managed by a professional. So usually with passive funds, they will more so mirror a particular sector or a market index. So for example, you could have a fund that mirrors the performance of the FTSE 100, and that's just basically the largest companies on the London Stock Exchange. So essentially, you would have a fund that actually tracks the performance of that index. So when you hear people talking about index funds or exchange traded funds, so ETFs, yeah, I had to practice that a good couple of times. That is essentially what they mean. Okay, Veronia, all good with the basics, but I've been hearing about bonds. What are they? Basically, bonds are actually debt obligations. So if a company or a government needs to raise cash, then they might decide to issue a bond. So essentially, they would be borrowing money as an IOU. And with that, they would then agree on an interest amount to be paid over time. So if you do buy a bond, then you would basically become one of the lenders. It's kind of like you going to the bank to borrow money. So you would know what the interest rate is, and then you would be paying it off over time. So usually when I'm kind of looking at the risk spectrum, first I would kind of see bonds nearer the bottom, so relatively low risk. Then I would probably see funds slightly higher on the risk spectrum. So when we're talking about mutual funds, ETFs, index funds, then slightly higher than that, that's where I'll see individual stocks. So if you are investing in individual companies, that could be considered slightly higher risk. Now, the general rule of thumb is that usually the higher the risk, that will be associated with higher potential returns. But of course, that's not always going to be the case. So you do need to make sure that you are doing your research and finding out what's comfortable for you. Okay, I think I'm getting it now. So I'm definitely ready to invest. Sign me up. Where do I start? So now we've got the basics out of the way. Now I'm going to talk through the steps that I took to start investing in the stock market. So the first thing I did, and I don't think it's a huge surprise, but I set my goals. Now I know that I've said this time and time again, but guys, it's actually so important because that helped me to identify where I currently am and where I want to be. And with that, I needed to figure out how I intend to get there. So for me, a lot of you guys will know that investing is very much a long-term strategy. strategy. There's no get rich quick schemes here. And actually, once I set my goals, that allowed me to understand how much I need to be investing each month as well. And if you haven't watched it already, I do currently have a video on how I actually plan to invest in a bit more detail, so I'll be sure to put the link up here and in the description below. Step 2 was actually identifying my risk tolerance. So I needed to figure out how much risk I could practically take, and also understanding what I would be comfortable in investing in. So whether that be in bonds, funds, or individual companies. So if I hardly wanted to take any risk, then I might choose to invest in bonds. But if I'm happy to take slightly more risk, then I could choose to invest in funds. And if I wanted to take a little bit more risk, then I could choose to invest in individual companies. Now, there are actually questionnaires that you can take to identify your risk tolerance, which I think is really good. So all you would need to do is just do a quick Google search, and I'm sure you will find a few there. So as an example, in my case, I would say I'm relatively risk averse. So you wouldn't necessarily see me piling all my money into individual companies, but I'm not so risk averse that I just put all my money in bonds either. So for me, investing in funds makes sense. Again, just make sure you're doing your research and identifying what's best for you. But I would say that I think a lot of people, especially beginners, are more likely to invest in funds. Then step 3 for me was deciding on my strategy. So again, this is where I decided if I want to invest in bonds or funds, and if I wanted to invest in funds, would that be active or passive, or would I also want to invest in individual companies? So again, using myself as an example, I decided that the majority of my portfolio would be held in passive funds. So for example, ETFs. And for me, it made sense because it's relatively low cost. Plus, I did like the idea of just tracking the market. I also decided not to invest in bonds for now, just mainly because I'm relatively young, so my money does have quite a long time to grow. So I do think I can afford to take that risk. And I think I've mentioned it before, but I might choose to dabble in individual stocks, but that would only consist of a small part of my portfolio. I would say though that with individual stocks, it does require a lot of research. And also, I don't have to just pick one or the other. I could choose to do a mix of individual stocks and funds, or even some bonds as well. Again, you just need to research what's best for you. Then in step 4, this is where I picked my platform. So this is just answering the question, where are you going to invest? Who are you going to be giving your money to? Now, there are so many different platforms out there, so you will need to do your research. Now, the popular ones that I've heard include Vanguard, Hargreaves Lansdown, AJ Bell, Trading 212, and Freetrade. But again, there are so many more. So I like to think of platforms like supermarkets. So they're going to sell all different products. So as an example, let's say we're looking at 3 different platforms. So the first could be Hargreaves Lansdown, we'll call that Tesco. The second could be Vanguard, we'll call that Sainsbury's. And the third could be Trading 212, and we will call that Lidl, because you guys already know how I feel about Lidl. So again, these different platforms, so these different supermarkets will have different products. And actually, you might find that some of these platforms even have their own products. So for example, Vanguard actually have their own products. So they have their own ETFs and index funds. And that's similar in the supermarket example. So with Sainsbury's, you could have Sainsbury's Basics, and you could also have Taste the Difference with Sainsbury's. And I think that's where some people can get confused, because if you're talking about Vanguard, for example, you need to be thinking about, are you talking about them as a platform, or are you talking about their funds? So hopefully you got a bit more clarification. Now, when I was doing my research, I was looking at the fees as well, because with some of them, you will have to pay a platform fee when you purchase a product. So for me personally, I was looking for platforms that had very low fees, because actually those fees can potentially add up every year. So for example, you will see a lot of people talking about Vanguard as a platform because they do have relatively low fees. You could also choose a platform that's actually fee free. So that is where Trading 212 comes in. So Trading 212 is commission free, and that's why it's quite popular. And again, using myself as an example, that's why I decided to go with Trading 212, because I was looking for a platform with very, very low fees. Again, if you do plan on using Trading 212 as a platform, then you can use my link in the description below, and we both get a free share once your account is verified and funded. But again, Trading 212 isn't going to be perfect for everyone, so just make sure you're doing your research and finding out what platform is best for you. Again, as an example, for me, my 2 favorite platforms were both Vanguard and Trading 212. The only thing with Vanguard is that you can only invest in Vanguard funds, but with Trading 212, I can actually still invest in some Vanguard funds, and I can also invest in other funds as well. So that's why I chose it. So in step 5, I made sure to invest in a stocks and shares ISA within the platform that I was using. So if you don't know what a stocks and shares ISA is, it's essentially just a tax wrapper, and that's where you could hold your investments. So again, you could potentially invest up to £20,000 per tax year. And what that essentially means is that if your investments are within an ISA, then you wouldn't need to pay tax on any gains or income you get from that investment. So if there's a time I receive dividends happens, or I decide to sell my shares and I actually make a profit, I wouldn't need to pay any tax on that. So for example, if I actually open my Trading 212 app, you can see there are 3 options. So one is Trading 212 CFD. I wouldn't touch that with a barge pole. That is for experienced traders. So yes, not involved. There's also Trading 212 Invest, and there's also Trading 212 ISA. So with the Invest, that would be your usual just general investment account. Then you've also got the ISA as well. So I chose the ISA option. So I hope that makes sense. Also be aware that I don't think you can open 2 stocks and shares ISAs within the same tax year, but that's why I couldn't choose both Trading 212 and Vanguard, because I could only open 1 stocks and shares ISA within that year. So make sure you choose wisely. Then in step 6, I've just kept on investing. So for me, consistency is key. Okay, so I've just put £10 in my stocks and shares ISA. Well, that's me done for the rest of the year. So I know that as soon as I get paid, a chunk of money is going straight into my stocks and shares ISA. And you will have also seen that in my latest budgeting video. And if you haven't watched that yet, then I'll be sure to put the link in the description below. And then in step 7, I continue to keep on investing even when stocks are down. In fact, I've actually used it as an opportunity to buy even more. Again, that's because I'm investing for the long term. So whenever there's all these short-term swings, it doesn't necessarily have an impact on me. The market just went down. Well, Black Friday just came early. Let's look for some deals. Now, I would say if I was a total beginner and I was really nervous of these market swings, then I would literally just choose my stocks on my funds. I would set up a direct debit and then just set and forget. So I might check in maybe every few months. Again, this would depend on your risk tolerance. So if you did like this video, then please do give me a thumbs up, as it really does help to support the channel. And yes, before you guys ask, I will be sharing my stock market portfolio update on Tuesday. So looking forward to that. I do post every Tuesday and Friday now, so if you would like to know more, then please do subscribe to my channel, and I will see you next Tuesday.